Good morning. I am Kevin Price. Delighted to be with you. Going to spend some time talking to you about you and your business. Got a lot to talk about. So I think we'll get straight to it with our first guest, Marty Okner. He's a regular contributor on The Price of Business, and he specializes in mid-market companies, bringing us great content, information, and guests in that domain space. Marty, before we get started with your guests, why don't you give us both your organization website, which I believe is acgny.org. Is that right?
It's acgnyc.org, Kevin.
Yeah, NYC. Yeah, and then your company website.
Sure thing. My company website is shmcnglobal.com.
Very good. And tell us a little more about what you do, and then introduce us to your guests.
Sure. Well, Kevin, it's always a pleasure to be on the show. And professionally, I have an advisory firm, and basically what we do is we prepare middle market companies for sale or capital raise, help them improve their financial operating performance, and build out their marketing plan in order to grow the businesses in advance of a sale so they can get a higher valuation. And I'm also president of the chairman of the Association for Corporate Growth, past president of the Association for Corporate Growth in the New York chapter. And what we are is the largest association of middle market executives in the world, actually. We've got 58 chapters throughout the world, New York being the largest with 1,100 members. And we absolutely love what we do and helping the middle market companies that we look to grow.
Awesome. And your guest today?
Well, I'd really pleasure to have Michael Cerminaro, who's a fellow ACG New York board member, to the show today, and an expert in the capital markets. So when a company goes to either raise equity or debt, Michael is the expert as to what's happening in the market and how they can best realize those processes successfully. So welcome to the show, Michael.
Thank you very much. I appreciate participating.
We're glad to have you on the program. Talk a little bit, kind of give us your elevator speech.
Well, Cerminaro Group is a private equity advisory platform that's focused on helping private entrepreneurs achieve their goals by either assisting them with capital formation, assisting them with putting together capital formation plans, business development plans, and getting companies to market.
Very good. Marty?
Great. So, Michael, given your expertise, how would you describe the state of the capital markets as we're sitting here today? Given some of the most recent press around, the stock market, had about a 2% decline yesterday. Some say that, now it's still the seller's market, but we're kind of reaching the crest. How would you describe the state of the capital markets right now?
Well, look, we've seen a very robust expansion in the capital markets since the doldrums of the financial crisis, and that's cut across the entirety of the capital markets. And if we think about it in the context of M&A, M&A in the U.S. today is beginning to reach pre-recession levels, which is pretty tremendous given where we were at the top of the market in 2007. A lot of that is being driven in the current environment by very large mega transactions and deals like the $55 billion Charter Time Warner transaction or the nearly $50 billion Heinz Kraft transaction. And as a result of that, we've seen at the large end of the market a tremendous shift with an increase on a year-over-year basis of almost 22% increase in M&A activity for billion-dollar-plus transactions. But as both Marty and I are part of ACG, we're really focused on the middle market, and we've seen the middle market continue to be robust in that regard as well. A lot of folks that were previously sitting on the fence are jumping back into the market, and the middle market is really seeing about a 9% increase year over year in M&A activity. And in addition to just the M&A activity, we've also seen recent studies out that have indicated that about a quarter of the middle market organizations that are being surveyed are now actually very actively involved in raising capital today to either pay for capital expenditures, pay for acquisitions, fund product or service expansions, and it's a significant jump from last year where a lot of these folks were just sitting on the fence waiting to see what was going to happen.
Mm-hmm. By the way, can we get your website information or how people can get more information about you, Mike?
Yeah, you can go to www.cerminarogroup.com.
Very good. Go ahead, Marty.
Great. So, Michael, when you work with middle market companies, and private equity funds in their, capital raising efforts, what do you see in terms of best practices? What do you think a company should really be doing in order to, help prepare themselves for raising capital?
Well, I think first off, it really comes down to whether or not you're dealing with top quality management, and at the same time, are these companies that really have a good strategic handle on what their focus is. And it comes down to really understanding what their rationale for these kinds of transactions are. Is it a strategic move? Is it geared towards increasing visibility in the market? Is it geared towards trying to develop another level of efficiency and profitability within their business? Or is it just simply a smart way to plug a missing capability that exists within their company? And in some cases, it's also their ability to reach new markets, either on a regional, a national, or a global basis. And it involves some type of global expansion. And so really drilling down to better understand the strategic motivation is an important element.
Very, very good. Marty, we only got about a minute or two left. Why don't you wrap it up for us?
Sure. So, Michael, there's been a lot of press around a potential interest rate hike at the Fed level, and if that happens, do you see that as being disruptive to the middle market at all, or do you think that basically good companies will continue to command high valuations and the buyer interest will still remain at a good level for good assets? What's your prediction there?
Well, there's been a lot of talk about Fed tightening in a possible 25 basis point rate hike sometime this year. Maybe that's going to be in September. Perhaps it's going to be in December. I think the current thought process is that there's a 50 to 60% probability that happens this year. If it does, I think it's going to be modestly impactful to deal activity. Interest rates today continue to remain extraordinarily low compared to historical standards. 10-year Treasury yields are only around 2% compared to the 30-year average of around 5.5%. There continues to be tremendous liquidity in the debt capital markets, tremendously strong competition among lenders, and interest rates are attractive, both short-term and long-term. And I actually am more concerned that there's going to continue to be gradual easing in the underwriting standards for many of these lenders as the competitive landscape increases. And it's going to perhaps call the top of a market. And what we've seen in the past are higher loan-to-value ratios, calling that more interest-only components, and increased lending activity in the secondary market. And I'd be cautious in looking at all of those things.
Got to wrap it up on that point. Thanks so much to both of you, gentlemen. Do want to remind you, the listener, that this interview will be found over at usdailyreview.com. While there, like it on Facebook, follow it on Twitter. All right, gentlemen, have a great rest of your day. And also, when we come back, we're going to have much more for you right here on The Price of Business.